Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 22nd of March, 2021. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is the German index, the DAX, and yep, the index today managed to recover some of the losses made at the end of last week. However, as you can see, somehow this barrier right here, the 14,670 mark, did provide somewhat of a resistance, and yep, from here we saw the index kind of retracing back down, and it's currently seems to be kind of correcting to the downside. At one point we did have a drop below the 14,563 territory. I talked about this one today, this morning, but it was just a brief drop, and then yep, the bulls picked up on this. Now we're stuck in this little area, where we, to be honest, we will take a bit of a careful approach, because if we manage to push above this barrier, above the 14,000 670 territory, and manage to stay above it today, then we might start maybe considering a possible move back to the current all-time high near the 14,804 zone. But of course, if the index drifts lower and drops below this little hurdle, this 14,563, now that's where, of course, it could increase its chances of drifting a little bit lower here towards going for a larger correction to the downside here, because the reason why I'm saying correction, because we're still trading above this short-term, although tentative, but nevertheless a short-term upside support line taken from the low the 26th of February, and that's why, for example, for now I'm going to take a bit of a careful approach here, just because we are stuck in between these two little levels, these key levels for now. Um, but if you want to look at some larger extensions to the downside, well, of course, I mean, a break of this upside line is needed to drop below the 21-day EMA, and yep, all that kind of is required in order to go for the downside. But at the moment, we're gonna keep it short and simple, guys. I mean, for now, like I said, I'm gonna stick to these two levels. I need to see either a daily close today above the 14,670 zone, or I would like to see a drop and a daily close below the 14,563 territory right here. Nasdaq 100. So Nasdaq 100 is trying to make its way back up again here. It's already open, of course. And yep, it's currently testing that 21-day EMA. Now, I'll stick to the same idea that I mentioned last week. Basically, for now, I'm gonna be very careful and probably even take a neutral stand as long as the index trades inside this little kind of, well, let's call it a range, because it's not really an ideal range, but nevertheless a possible range. Now, another thing to keep in mind here, if we see this index pushing above the 21-day EMA and then rising above this 13,057 territory, which at various points here was seen acting as a good area of resistance and support, if it pushes above this area, this of course opens the door back to this key level, this key resistance barrier near the 13,300 zone. But of course, as some of you probably might have already noticed, we could potentially have ourselves here an inverted head and shoulders pattern. So as you can see, we have the left shoulder here, the head, and the potential formation of our right shoulder right now. Now, don't get me wrong, it's a little bit of, maybe I would say, even a complex head and shoulders, inverted head and shoulders pattern, but could be a possibility. Now, the reason why I'm not sticking to this idea, let's say, as my main idea for now, it's because, well, I mean, for that, I would need to see a stronger move here back to this area, back to this 13,300 level, and then, of course, a violation of it, and the daily candle staying above this hurdle, and that's when I will, as I said, I will consider a further move north, and this is when I will consider this potential pattern being a inverted head and shoulders pattern. For now, there are still obstacles in the way, and of course, one of them is this downside line here. Again, don't get me wrong, it's a tentative one, but nevertheless a downside line. For the downside, if you wanna get a little bit more excited with let's say examining lower levels, then probably wait for a drop below the 12,758 territory right here, and then yes, further declines could be possible, especially if the price also falls below the 100-day EMA here, and yeah, maybe more sellers could join in here. So that's why, guys, as I said before in the beginning of this analysis, we are at a very interesting spot here, tricky spot, and that's why I'm going to take a bit of a neutral stand for now. DXY, a quick update. Just wanted to show you what's happening here. Again, the same nonsense is happening here on DXY. So last week I talked about it, and well, it seems that so far it's doing this again. So yes, this level here it keeps getting violated, this 91.96 zone, or in a way, if you want to round it up towards the 92 zone, you can do that. But in either way, the 92 territory keeps getting violated, but we struggle to remain above it. So yeah, I mean, that kind of gives a bit of concern here, and potentially if we continue to struggle to overcome this area, this resistance area, then yes, another slide here could be possible. However, for me to, let's say, get a little bit more excited with the downside, well, still I would prefer to see a daily close below the 91.36 territory right here, because at the same time, not only this would break this key support zone, but also place the price below all of the EMAs here. Quick update on gold. Not much is happening here, to be honest. I mean, gold continues to trade below that 21-day EMA, but if you remember this morning, I said that in order for me to, let's say, consider lower areas, slightly lower areas, a drop below the 1719 level is needed. For the upside, a push above the 1760 territory could do the trick here for more buyers, and we could see this commodity drifting towards this downside line, taken from the high of the 7th of August of 2020, and then of course we would take it from there. Around here, the commodity would also test these EMAs, the 200-day EMA and the 100-day EMA, and then of course we'll take it from there. If it wants to break above it, wonderful, great news. Yes, we could see higher levels being met, but at the moment, let's keep it short and simple, and let's keep an eye on these two areas. Ethereum. Ethereum is also stuck. So last week I talked about this idea where we could see maybe a bit of a drift lower here, and we could see a push, maybe a rebound from here, from this 1666 territory. If so, then yes, the upside could be back on the table. Now, given everything what we see here right now, to be honest, I mean, we'll probably take a bit of a careful approach, and I'll keep this arrow for now. This scenario, I'll keep this one, yep, for now, but I'll shift it a little bit to the right, as this could probably become the let's say something for later on, because for now let's say keep it short and simple. one thing for sure, we have a little short-term downside line here, which so far is being respected. On the other hand, and again, this is depends on how you're going to draw this, but we might see a potential maybe descending triangle pattern here. Now, this is how it kind of looks like. If we get the drop below this 17, let me just double check this, 1725 zone, approximately around here. If we get a drop below this area, this of course would work out perfectly according to all the TA rules, as of course as we know, descending triangles tend to break to the downside. I've proven that for you last week when I looked at WTI oil. And in general into oil. But here, for example, yes, if we get a drop lower, this could open the door towards lower areas, but don't forget that we're still above this upside support line drawn from the low of the 23rd of December. So that's the reason why I have this arrow still kind of here. I'm not really getting rid of it, because the idea here could be that we could see a drop, we could see a test of this upside line, and then maybe a rebound and a pushback to the upside. So yeah, keep your eyes on this. This scenario, let's see if this is going to work out. But if, let's say, in case this decides not to travel to this 1725 territory, in case the 21-day EMA will continue to provide support, then yes, a nice push back up here, maybe even a break of this downside line straight away could be possible. Now, how you could how you could kind of choose between the two? Well, if we do see a drop below the 21-day EMA, then of course, yes, like I said, I'll start looking at this 1725 zone, and this is where it could become a little bit more possible to see maybe a break of this this barrier, this not barrier, but this hurdle, where it could be seen as a lower side of the descending triangle. But again, if the 21-day EMA continues to provide support, then yep, we could get closer to the idea of maybe seeing a break of this downside line first. AUDCHF, so drifting a little bit to the downside today. So first of all, let me just adjust the chart here a little bit, and let me just clear up the chart. Actually, let me just have a fresh start. And first of all, of course, I'll get the upside line back here. This is something that I'm still keeping an eye on, but that's from the more of a medium-term perspective. So yes, the overall trend is still to the upside. We could see this one pushing higher, but from the shorter-term perspective, we can see now that we are seeing a nice reversal here today, and we are approaching, let me just grab one of the horizontal lines here, we are approaching this little hurdle here, the 0.7144 mark, approximately around here. So this could also be seen as a possible neckline, because if you take this little formation here, this could be seen as a possible double top pattern. But if you want to consider that idea, of course, a break of the neckline is required first. But also, kind of a good practice here is that drop below the low of last week here could do the trick for more sellers, and we could see this one sliding further south, especially if it also drops below the 21-day EMA here. Now, for now, like I said, we're going to be very careful here. Yes, it is approaching this key support zone, but if that gets cleared, then all eyes are going to be on slightly lower areas here, as we could go for a bit of a larger correction to the downside. For the upside, what I need here to see is probably a push above the highest point of February near the 0.7260 zone, and then yes, higher levels could be met. Similar story with GBP/CHF, finally reversing strongly here to the downside and testing its 21-day EMA. Let me just adjust a few levels here, as some levels have to be adjusted. Let me get rid of some of these. This is old analysis. Now what we could keep an eye on here, of course, is this low, the low of last week near the 1.2789 zone, and you can see that today we already did have a break below it. Can we move further south? Well, I mean, we'll have to just wait and see here because we don't want to rush into anything. We can see that the 21-day EMA is also providing good support. But if the daily candle stays below that 21-day EMA today, then yes, of course, we'll go for a bit of a larger correction here to the downside. Now, US dollar against the TRY, the Turkish lira. So the big news, if I don't know if you've seen it or not, but yeah, the news came out that during the weekend, the Turkish president kind of fired the Turkish central bank governor, and yep, who was a little bit in favor of raising rates in order to kind of control inflation. Which didn't really work well with the Turkish president. So yeah, I mean, this is the reaction we're having today. So the Turkish lira devalues against its major counterparts. We had a huge spike here, and yep, it drifted higher and almost managed to reach the highs here reached in November. And if I'm not mistaken, let me just click on the overall here. So the levels that we reached last year in November kind of are the all-time high here for this pair. Today, with this jump, we almost managed to reach that all-time high, fell shy just by a few kind of points here, and yep, drifted back down. So how we could look at this is probably again, we'll keep an eye on the political situation there, but from the technical side, we can keep an eye on it like this. So if the pair continues to trade above the highest point of the current, the previous highest point of March, near the 7.78 territory here, roughly around here, then there is a chance for this pair to move higher, especially if it also pops above the high of the 24th of November here near the 8.05 level. If it travels above it, then yes, the all-time high is kind of back on the table. Now, in case this pair drifts back below the previous highest point of March near the 7.78 territory, then we'll be very careful. Still, I'm not saying that we're going to turn bearish on this pair, but something to keep in mind here. We could see maybe a bit of a corrective move here to the downside towards this upside line. So don't forget that the pair, the bulls could still have a chance to jump in somewhere around here. And for us to consider the downside, well, a break of this upside line drawn from the low of the 16th of February would be needed still. So yeah, I mean, I do understand it's a bit of an area here, but we rather stay safe. And yeah, especially with this pair or any pair kind of where the Turkish lira takes part in. So be very careful with the Turkish lira pairs. Yes, for now they could be, yes, they can present very good opportunities, but at the same time, guys, I mean, if you don't have your stop loss in place, they can easily wipe you out. So be very careful on that. Jumping into a Euro GBP. So I talked about this one previously, and I'm gonna come back to the same idea that I've mentioned a while ago. The idea was that first, last time when we had a strong push above this barrier, above this 0.86 territory, everything was working well, but by the end of the day, the pair kind of drifted back down and fell back below this hurdle, below the 0.8596 zone, or let's round it up here a little bit, the 0.86 territory. So it fell back below it. Now, today we're having another move higher, another test of the 21-day EMA. Currently, a holdup is occurring here. Can we see this daily candle remaining above this hurdle, above the 0.86 territory? Well, we'll just have to wait and see. Can it drift back below this territory, below this hurdle, as it did here on the 16th of March? It can, but again, we have to wait and see, guys. So this is an interesting pair. Yes, if you've managed to, let's say, capture this move here above the 0.86 territory, wonderful. But I would suggest having your stop loss just in case here. I mean, on a break even, just in case this reverses again as it did here on the 16th of March. That's the reason why I'm always saying wait for that daily candle, and then we could take action here. EURUSD, very quickly on this. Again, similar story here. This 1.1880 is 1.1880 is still providing good support, although we had a little break here below it, but no, yeah, it didn't really, let's say, work well here. So for now, I would say I'm still neutral. I'm still watching these two levels. The same analysis as I mentioned this morning and yesterday on last week. So I need to see a kind of a daily candle staying either above the 1.1990 territory here or below the 1.1880 zone. So until then, I'm just, like I said, I'm a little bit on the neutral side. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, you joining in. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, that's 7 o'clock GMT time. For now, have a wonderful evening, stay safe, and I'll see you later. Thank you very much, and bye-bye.